All right, traders, welcome to today's recap. It is Wednesday, November 14th, and another, I would call it another nasty day in the markets. So when you look at the overall numbers, there's a couple things that are misleading today, right? You got the Q's down 0.75%, SPY, which I have out up in front of me, finished down. So you can see SPY finished down 1%, but if you look at S&P futures finished down 1%. But if you look at SPY, because it doesn't really cover, the times are going to be different. SPY is cash close. Futures have a different open and different close. So, SPY is down 68 basis points, which again doesn't feel that bad. But if you look at the move from high to low, it's nasty. It's a nasty move. Same thing with IWM, which was up at 1.1%, finished down 70 basis points. So that's 1.7%. So it's a pretty nasty range that we're seeing on an everyday basis. But I wanted to go over this a little bit here, just in the Qs on the 5-minute bar, because I do like to look at the smaller or the shorter time frames as well. But it's a good observation here, right? We're trending down all day long. There's some Brexit headlines out, and we snap up, and we snapped up right to the bottom of value, which again, I say this just about every video that I shoot at night. The value area is really giving you a good place if you're doing quite a bit of scalping. The value areas provide just, I'll say it, value, because otherwise, I mean, this is a great place to say, hey, that's where I'm going to take my profits on a move from lows to high, and then just fight another day, live to fight another day, which is basically what this market is kind of giving. So let me talk a little bit about that. Let me bring up the SPY. I'll go over the major indices and a bunch of things to kind of talk about. But we've got what, 1, 2, 3, 4, 5 red bars in a row, almost as many green bars as we had the other way around. So very tricky market to be dealing with right now. I will tell you what I'm doing. Let me just go through the Qs too, and I'll talk about how I'm trading this market. I will tell you my secret sauce to trading this market right now. So again, Qs, and look at the range from highs to the lows. 200-day moving average, which is curling over. We'll see if we make a higher low here. I'm not sure that we will. You've got an MACD crossover happening here, so some ugly things. I always bring up IWM rather than Russell futures, but you could use these either way. I'll start with IWM, which I had a question today about the death cross, right? The 200 crossing below the 50. Yeah, it's ugly. There's not much for me to really comment. I heard, I wasn't listening that intently, but I heard them go over this on the Fast Money Show on CNBC yesterday. Let me see if I can bring up a chart here. Oh, by the way, this is the I wanted to talk about this as well, so just hang on. That's the Baltic Dry Index. Okay, so let's bring up IWM, and we could see the last time that we had a death cross. I mean, it's generally a negative thing. It doesn't always. It's not 100% with certainty that it is what it is. It sounds, or just because it says death cross, I know it sounds horrible. So when's the last time that we've had this? I think it was a couple of years ago, and then it flipped right back over the other way. So let's see if I could do a 5-year chart on here, because this is not cooperating. So here was the last time, and again, I think this was mentioned yesterday on CNBC, but here was the last time that the 50-day crossed below the 200. Yeah, we spent some time below. I mean, we did this W recover. We bounced up to the 200-day moving average when the price was below. We went lower, and then it took a while, right? I mean, it took, almost a year for this to get itself back to where it was. So, my thought on this is it's going to take a while to repair this. I go back to what I put in the weekend newsletter. I think we're going to be trading sideways in a very whippy market right now, but I think sideways may be the direction for a while, because normally, I'll give you just a little bit more into my thinking about moving sideways. after you have a big run up, you usually digest for a while. It's just a natural thing, right? This is back in 2013. We had this big run up, and then we broke the 200 and we digested for a while. Here we did it larger, and it took longer. So it's usually when you have this type of a break, my thought is it's just going to take some time to get straightened out. And again, this is just, if you look at what the IWM is, which I think is very important to do because I think a lot of people refer to these indices and they don't actually look to see what the components are. Now, if you're just trading the indices, it doesn't really matter. Or if you're buying or selling IWM, it may not matter to you that much. But if you're a single stock trader and you're looking at the IWM, you want to know what is in this thing. So I'm always in the camp of looking to see what the hell is in these things because you may not own any of these. Like, so for me, I haven't been bullish on the banks in a long, long time, but it's the biggest weight in IWM is banks and REITs. That's 16%. So if you're a single stock, if you're trading single stocks and you're worried about the IWM, I would be aware of what those biggest sectors are in there because they may be doing something very different than what software and healthcare is and so forth, and you could look at the sectors. So I know that may be a little bit confusing to you, but it's just the way my brain thinks. I tend to look at what are the names that are doing it. Because in any market, usually in any market, now obviously we have a bunch of names that are breaking down, more names breaking below the 200-day moving average that are breaking up right now. But I would rather own the names that are trending up, and you could choose that if you're an active trader. So let's go. I said I was going to go over my secret sauce of trading this market. It's basically just not it's not trading that much. This is a very challenging market to trade, and I've been doing this for a long time, and I've traded through bear markets and so forth, and usually I'm pretty good at it. But this is very difficult. I think right now I see, I did see some people talking about and have been seeing people talk about shorting the market here, which, no doubt we are now in a downtrend. Once we're below the 200-day moving average, it is what it is. And on any particular day, if you go back to the 5-minute, right, if you go back to the 5-minute, right now it's very easy to kind of see what kind of day we're in. For the most part, unless there's headlines, this was on the Brexit headlines that we got this bounce, which was quickly wiped out. But you could see for the most part, if you just look at the 5-minute candles, look at what kind of price action we're getting. Big red candles, small green ones, big red candles, a small green one. So this is the way the market is right now. The sellers have control. And it's also what makes me think about is how far we've gone up. So, there's still a lot of money in this market. When I look at the ETF fund flows on a daily basis, we saw 1 week of outflows, and that's basically been it. There's still a lot of long money in this market. Or I shouldn't say long money, but there still is a lot of money in this market. The ETF fund flows, if I saw 3 or 4 weeks straight or of big outflows, then I would say, okay, this market is pretty washed out, but it doesn't appear that way. So let me talk about shorting this market right now. The reason why I'm not doing that, and I'm going to go into sectors next, just to show you what else kind of is revealing right now. But the reason why I'm not going crazy shorting is because I think really the sentiment. I mean, you look at the news that is coming out on a day-to-day basis, it is all on one side of the boat. There's negative Apple news out. There's negative Brexit stuff out the last couple days, although today it sounds like they've did something. There's negative trade data out. There's negative everything. I did not do many chart studies last night because I usually do it every other night. And just looking at what was on Twitter, everybody is negative. Everybody's negative. That is talking about recessions, the world coming to an end. So I don't think that that's a great. I want to be a little bit contrarian. I don't want to do what everybody else is doing right now. So if you've made gains up until now, great job, congratulations to you. But I think all it takes is a couple headlines, positive headlines, of course, which is few and far between right now, and this market could rip to the upside. So I don't have a crystal ball. I don't know when that's going to happen. But also, I don't like to short markets when the sentiment is that bad. If you look at the fear and greed index, it's a 7 out of 100 right now. Do I want to be shorting when sentiment is that bad? No. Um, so, and also, if you look at that Nasdaq sentiment that's put out by, I think it's Market Harmonics. If you just Google Nasdaq sentiment, it's really bad. It's really ugly. So, it's not. That's not the place for me to. I want to short when everybody else is basically when sentiment is the other way, right? That's when I think there's an advantage, not when everybody is all saying. So, does that mean I want to jump in with 2 feet right now? Absolutely not. I think right now this market is moving too fast to really do anything other than day trade. And I'm day trading a little bit. I traded some XBIs, which I want to talk about this chart next. But XBI, which was down over three, I think it was down about 3.5%. I took a shot at this and went long, and as soon as we broke, the price got below the 5 period. I ducked out of it, and I made money on it. But that's kind of how I'm trading right now is just basically for singles, and not home runs. Anytime I try to trade a home run for a home run, I strike out. And I went over that in Facebook this morning. Facebook. I'll give you just a quick talk about what I did yesterday in Facebook. And you can see Facebook actually did well today. It is what it is. It finished up. So, here's what I did yesterday. I went into a Facebook trade because we saw calls, and I took a target, and then I got greedy, and I said, let me push up my target a little bit. And then this happened. I mean, it's just that quick. It's a 5-minute bar, and you think it's going to hold in here, and it just keeps sliding and sliding and sliding. So, that's a that's my fault, to be able to not to have a winner, a nice winner, and get greedy with it, and have it be gone away from you very quickly. But okay, so that's that. I wanted to talk about XBI, and then I'll talk about something positive, and then we'll go from here. But here is a cause for concern. Why? Because I use XBI, which is the equally weighted biotech ETF, as a proxy for risk. It's one of those. It's kind of like some people use IWM, which I do as well, as a leading indicator. Some people think small caps lead the market a little bit. I do believe that. And if we going back to what we were talking about with with IWM and the death cross, that's not a great sign for the market. It just is what it is. It's not a great sign. Either is this XBI. There's a whole bunch of things going on about. People are basically giving some excuses to technology and so forth. Well, XBI is biotech. Now there was a tweet out about healthcare pricing, but bottom line here is, I don't want to rationalize it. The prices took out the October lows. We want to be seeing some of these leading indicators that I have on my board start to lead the market higher, not break the October lows. So that's not good. So let me just switch gears for a minute. So that's why I'm more conservative right now, and it's tough for me to really take shots at longs when I see some things breaking down. So for me, my secret sauce is just to kind of not get chopped up in this market. And I do think that at the end of this there will be some good buying opportunities, but I don't think I don't think it's now. I don't think it's right now yet. Powell speaks today, also kind of a reason for the market kind of selling off at the end of the day. Every time this guy speaks, the market goes down. He speaks in about an hour. I believe it's 6:05 Eastern. I believe is what I saw earlier. So I don't really think anybody would want to get long into that speech. Going in, let's just be, let's just be logical. So let me talk about where I think there's a little bit of strength right now, which I thought was I wouldn't say a little bit of strength because one day is not a trend, but a little bit of positive, I would say, is the Chinese internets. Right, this is one of the first groups that went down. This looks ugly. right? But at least Tencent was up 4.2% on earnings. At least it reacted. We've seen a number of times that it's reported earnings and it's just fallen apart. So let me turn over to one name that I'm watching is Alibaba. And you could see that I've got a trend line or a yeah, basically it's a neckline, right? I don't know if this is exactly an inverted head and shoulders, but it's kind of resembling it, right? You got a left shoulder, you got a head, and you kind of have a right shoulder. But bottom line is it's got to get over the 50-day moving average, which is the purple line that I've got coming into the picture here. So if this happens to catch that, I think it's a good looking trade. Again, in this market, you have to define your risk every time you enter a trade. You can't just say, "Oh, it looks great. I'm gonna stick with the trend." This would be a counter trend trade, but it's a name that I'm watching closely. And if you go to the weekly chart in Baba, it gets. I've talked about this weekly chart before in Baba, but it is holding. It's holding this 138 level, which I've talked about a few times as a good level to trade against, unless it breaks it. So really, that would be that's your support. Using the weekly, but I would not want to use that 138. What I would be looking for is for this name to get above this possible neckline or the 50-day moving average, and then set your 50-day moving average as your stop. I did this similar trade in EEM, and it because it poked its head above the 50-day moving average, and then it resorted back down again. So I used that 50-day moving average as my entry and my stop, and got out of it in one day. Basically, it was a one-day trade because I'm just not going to sit in a trade, and defining your risk is so important right now. If you start to look at let's see if I still have this relationship up. I think this is starting to get interesting. This is the Chinese Internet ETF versus the US Internet ETF. And you could see it's been basing here for a while. And you could do this. I've got a whole bunch of these. These are called CIXs on Bloomberg. They are, customized indices. But if I could bring this one up, if I'm looking at FXI and SPY, so the last one was the Chinese internets versus the US internets, which has been basing. The next one that I want to bring up is FXI long. So it's kind of doing the same thing. If you look at it a little bit broader than just internets, and again, the FXI has a little bit of everything in it. It's got banks in it. It's got some internet exposure in here. But you can see it's kind of basing, and it's it's definitely has outperformed China. Believe it or not, China has outperformed SPY over the last month. Now, it could just be that, if you look at the chart of FXI, it just basically has stopped going down while SPY has been going down, right? It's for the last month. It's up a little bit. So we don't know if this is just a pause in the trend down. We'll have to see that, but I am seeing some call buying in FXI as well, and I've been talking about that. Option flow before I leave. Oh, by the way, so again, I'm talking about some negatives, some positives, which there's something for everybody right now. But this is the Baltic Dry Index. This is a 5-year chart of the Baltic Dry Index. This is important because it's a measure of global trade activity. It's kind of breaking down here a little bit. So I could draw a trend line in here. Sorry, I'd like to cut these videos off right around here, about 17, 18 minutes. But there's a lot to talk about today. If I draw this, and that should do it. So you could see this isn't going to be perfect, but be careful. The Baltic Dry, if you look at what it did back here, it was kind of a coincident indicator back in 2000. Here's 2008, and this thing broke, right? So if you were to draw a trend line in here and said this thing broke here, that's what we did 2008 with the Baltic Dry really moving down. So you fast forward to back here to a 1-year chart, I would be a little bit worried that this thing is breaking down. And I've been looking at this basically about once a week over the last 6 weeks or so, and it is starting to break down. So that's something to be mindful of at this point. All right, guys. So that's it. Oh, option activity for the day. There has been some call buying going on. BSX was an interesting order at the end of the day. Just keep in mind, I hear this from a lot of people, a lot about option activity. They think that you see calls and it's going to go up. Keep in mind, there's a lot of, I could show you order after order where we see calls bought, and I'm 100% sure that the calls are bought and they lose, right? There's people making bad decisions. It doesn't matter whether or not calls are bought. It doesn't mean that the stock is going to go up. It's just interesting that there's a buyer in there. It doesn't mean anything. It doesn't mean just because we see a buyer in a couple names in something that it's going to magically make the stock go higher. Warren Buffett came out with a whole bunch of what he added stakes in, right? Warren Buffett is, I view, as one of the best investors out there. What did he buy the last quarter? He bought banks. Banks have been getting crushed. Now, granted, he's a long-term guy, value guy, but right now he's wrong. His picks, J.P. Morgan he got into. He added to Goldman, which is absolutely getting run over. Now I don't know. That's the last filing that came out. Who knows if he still has those positions? But he's usually in there for a while. But so just because you see calls and a name, even if it's Warren Buffett calls, it really doesn't. That should not. It does not translate into the stock going up. All right, so happy to go over that in more detail, but that's it for today's video. Have a good night. See you tomorrow.